Welcome back to another schema scalper video. In this video, we're going to be looking at 6E, which is Euro futures. Today is the 2nd of April 2025. Trying to make sort of one of these a day. So for each symbol that I trade, not for each individual trade, for each symbol I trade, and then I'll just go into the individual trades inside that. Okay. So this first one will be Euro futures. We're going to look at market profile first. Yesterday was a decent balance. I also went over this in my review video, well, not my review, my prep video. See, my ideas were all the way off. This was my first idea, or my main idea. This is my second idea. This is my third idea. My third idea actually played off, and then it blended into my second idea. This first idea I should have scrapped just because there are poor highs here. As you can see, there's no excess on the market profile. Like where the single plinks or single blocks, that's excess at the end. Here there's no excess, so that's kind of like a magnet that the market is drawn towards because that's incomplete. So that is an issue, and I need to do more studies with market profile when you have balance and poor extreme. That's number one. I'm gonna go do more studies with that. Just see how those days play out. And then okay, let's get into actual trading chart. Here I'm on a 3-minute chart. I don't like using 1 minute, it's just too quick and doesn't I I don't enjoy it. 5 minutes feels so long, so drawn out. So 3 is kind of the in between. So I use that. As you can see, we didn't get to the high of this value area. We got to the low over here, and that's where I should have been buying and holding up to this poor extreme. Let's get into the trade. So the first trade was at 109. These were scalps just towards the edge of the market profile, which I should actually stop doing just because there's the probability isn't there. Like it could have just turned here and continue going higher. And even this one that I took, it could have just turned and continue going higher, like what it did. So here, let's actually go into my footprint chart and I'll show you what I'm looking at in the footprint. I'll show you now what I'm looking at in terms of these bands. So these bands, the dark or the black line, that's what I'm looking at. If it's below that, I'm selling. If it's above that, I'm buying. If it's in between, I'm trying not to take a trade. But if the market profile is telling me like, hey, there's a moment to step in, I'll step in. Okay, so on footprint with euro and with pound futures, what I realize is that early in the morning, so that's like before 3 a.m., if you get a how do I say this? A candle or footprint with more than 110 on either side. So it's 110 aggressive sellers or 110 aggressive buyers. If you have that, like what you've got over here, let me just mark that out. Over here, we've got a 203. The market will usually move in that direction, like on the next candle, if that lower high is broken. So this lower is broken, move in that direction. I was late to the trade. I was late on the entry, sorry, not to the trade. I was late to the entry simply because I wanted to wait for it to become imbalanced down. So wait for it to be below that black line, the black band. Uh, do, 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 do. So there's extreme volume below the black band. And now I want to get short to the end of market profile, which is here. One, yeah, that's perfect. Sorry. That's my entry. You can see it just hovering there, hovering. Hey, I must actually just lock this thing because it's getting in the way. Just hovering there, hovering, and then eventually takes me out of VWAP and then goes to target. It's kind of annoying seeing that, but is what it is. Taking the wrong direction of trade for the day. I should only be buying from these lows instead of selling into it because there's actually no risk to reward here. Like this, that's a one-to-one risk to reward. And because of the platform that I'm using, I'm paying spreads, commissions. Well, there is spread and there's commission added, and sometimes I don't get the actual entry. Like something weird happens and it slips. There's not a heavy slip, but the the volume that I'm doing, you can see it. So it's a noticeable slip. I just broke my rubber band. And then this one as well, you can see there, I'm getting in at extreme volume, which is perfect idea. You can see over here, there was more extreme volume up here, and then it becomes imbalanced down. So I should actually be getting in from here, short, just to the end there. That's a decent scalp. You can see that extreme volume. Then here is a bit more selling. Oh, and then here was the other selling. Oh, I'm saying selling, but it's not actually selling. Ooh, this is gonna become technical real quick. If there's a number on the left hand side, that is not just aggressive selling. That is actually a mixture of both aggressive selling and passive buying. That becomes confusing really quick. But there's a book. What's the name of the book now? Some footprint book where the guy explained it. I think it was Trader Dante, someone like that. He explained it in that book, and then I don't know. I learned it before that. I can't remember where, but he explains in that book that that's not just aggressive buying. That's also sorry, it's not just aggressive selling. That's also passive buying. So if you get to an extreme level in the market and you see really extreme numbers, like kind of what you see here, like 300 at one point. Here's another one, kind of the similar 300, and the market's not going anywhere. Like the sellers aren't being rewarded for the efforts. Then that would be looked at as passive buying, and as soon as it breaks these levels, you're off to the races. It usually doesn't come back because those are like um limit orders, or those are limit orders. Sorry. Yeah, took that sell there. As soon as it traded below, took that sell. My stop was above these ones because that indicated that I was actually wrong. That it's not aggressive selling, that it's passive buying. Took this 1 to 2 risk to reward. It's terrible because if it goes there, the imbalance down. So why would I take 1 to 2? So risk to reward was not great. This one 1 to 7. That's adding to my losing trade. Terrible idea. Instead of the what was it? I had 1.3% on this trade, and then I added another like 0.7, making it 2% loss just because I added to it. So I could have saved 0.7% just by not adding, and then I should have actually taken it out this position halfway to the stop. Should have saved me another 0.6. So it should have been about 1.3% saved there. So I think, oh, and then you see for the rest of the day, That stays intact. This should have been level where I'm getting long. Up here, maybe I'm getting long. Let's actually check the volume here. You see what that's what I meant. That's exactly what I meant. You have this large amount of quote unquote selling. Here again, large amount of quote unquote selling, but the market's not like rewarding them. They did get rewarded for this selling, but for what is it? 900 delta. So for 900 extra contract short, you only move this much. I don't think that's much of a reward. You can see here it's, yeah, that's not much of a reward. Oh, well, never mind. That's a big sell down here. I think they just got exhausted. It's very hard to read this if you're not in the moment. Here you go. You get 114 buys or aggressive buying, passive selling. And this is where I would want to be long. Stop below this low because it's being protected by these levels. Yeah, and then target would be into this band first. Or there's more aggressive selling. Sorry, aggressive buying. My bad. Over here. And now you see this aggressive selling, or that passive buying is not getting, the aggressive selling is not getting rewarded. I think it's news event. Seems like it because it's just zeros on top. Aggressive buying again, 108 contracts. Immediately a move up, and that low is protected. 155 contracts, 107. And you see how the market just moves off of these. 289. That's a bit extreme. I would be cautious on that. And this 200 I would be cautious on just because of where it is in the candle and how high volume it is. But the overall target should have been trading towards that poor extremes for euro dollar or 6E. That should have been my overall target for the day. Also, I didn't look at any CVD because I tend not to look at CVD that much in this market. I look at it more in gold. If you wondering what CVD is, I think I have a video on it. Yeah, I do have a video on it. My bad, I do have a video on it. Ah, that gives me an idea. So I should have been trading towards these poor highs. You see how it just glides through that after. Just stays above. Should have been long from down here. Trading into poor highs. Okay, that's my Euro futures. That's my day. Took 3.2% loss, which is terrible. Should have been no loss because I actually prepped for this. And I had an idea that there was going to be a bounce from this low and it wasn't going to push through. Because you can see all the ideas that I generated. Oh, let's actually do this. Expand on your loss profile. All the ideas I generated weren't ones that are breaking this low. So my trade shouldn't be ones that are expecting a break of the low. Yeah. That being said, hope you enjoyed this video. Hope there was something insightful. If there's any questions, I'm more than willing to answer it in the description. Not in the description, my bad, in the comment section below. Cheers.